Hello, everyone. I'm here with Tanya, and Tanya is an MFE graduate, and she's going to talk to us about the most interesting quant project that she's been working on. Tanya, introduce yourself a little bit, and then tell us about what this is about.
Hello, everyone. My name is Tanya, and I'm a second year MFE program. This is my last semester here at Lehigh. And prior to that, I worked in banking for 2 years and graduated with an undergrad from the University of Zimbabwe in actuarial science. Currently, I've been working on a project called, well, to do with volatility. Um, and basically, what this project does, if I can dive deep into it, we're trying to look at and assess that for, like Euro USD data, how then does that like feed into the volatility market and just trying to assess the data that we have and basically build models on it. So the approach that I've been taking with this project is looking at arch and gotch factors and trying to model these and feed them to the data that we have. So
Can you define for everyone the Ash factor, by the way, the model?
so
Ash and
um
Gosh model.
okay. So arch and gotch models, basically these are autoregressive um oh wait. Arch models. Okay, so arch models are basically autoregressive conditional heteroscedasticity. And then basically like these are base models. So yeah, and then when you go to the Gauch model, which is the generalized autoregressive conditional heteroscedasticity model, it's a step up where it's trying to balance like the um effects of volatility and the effects of well the changing variance and just trying to make the models better because I think like the arch models were basically like the base models that were developed and then Gauch was a step up or introducing more factors to
And
make.
could and who? I'm sorry, and who can use this? Who would make use of what it is that you're working on?
So the beauty of the project is either FX traders or basically like I've also been trying to explore how like treasury and operations of real estate investment trusts can use this. It's something that I've been looking into as I did an internship with a REIT, which an internally managed REIT company. So mostly the target audience is FX traders, but have been trying to explore other avenues as well.
Continue. Explain to us your project.
So basically, the way that I've been looking at it is by trying to understand basically like we had tons of data, which is a decade of data, which is about 3.7 million observations. And of that, just trying to understand the data itself, because with every analysis, you start off with the data. You have to understand the data. You have to know what you're going into. So a lot of time was spent going into that. And then when I started like feeding models, it was just building from the pipeline that the team worked on, which from the guidance of our sponsor, we split our data into 60-minute, 2-minute intervals and 120 minutes. And basically, this is just to see how stable the data is when it's bunched into a larger group or a larger chunk of data. So that's basically what we've been doing. And I've just been exploring mostly about like, okay, we have these model pipeline that we have. How then does an FX trader utilize it? What can we get from this project analysis? How can we best suit the market, especially like how with everything that has been going on in the market and in the economy and like basically wide spectrum of finance where volatility has been a key issue. And we had a talk with somebody we were consulting, and they mentioned like volatility has been something that has been explored by even some of the references that we've been referencing, like from the research papers and everything that we've been delving into. It's something that has been a topical issue, like just trying to understand how volatility works, because usually when you observe volatility, it's probably most likely something that has already happened, and now we're like working with historical data. So it has already happened, but how can we, since we believe like markets are cyclical and history repeats itself, how can we then position ourselves to be able to respond more effectively when these things happen in the future, or if you see a trend that indicates to it? So that's basically what we've been doing.
And you've been working with Rob, who's a former hedge fund manager, I believe.
Yes.
He's kind of pushing you because you see this is not just a project that you and three other students. This is driven by professional, right?
Yes. So we've taken the guidance of Rob with his extensive experience with hedge funds, and also like even mathematically, like I believe he has PhDs in the
In
area. So
physics, he's got a PhD
yeah.
in physics actually, which is quite. In fact, a lot of our students end up. I come from a physics background. I'm surprised it would be more like a math background. But no, it's really people from physics and finance that find it more interesting. So he has been guiding you. But how is it to get attention? Because is somebody else doing this? I mean, are papers been written on this, or is this kind of something new? This
Yes,
approach?
so there's a paper that we were referencing, and mostly like taking some of like the mathematical guidance from that. It's something that has been done on options data. We've been using Euro USD data because it's really difficult or really expensive to get hold of minute data, which we need for like extensive analysis.
Have you been following the DXY, the index, the dollar index that tracks the dollar versus other currencies, or not?
No, I have not been following that recently. I did follow it in my previous project, but not on this one.
Because right now what's happening, and it's interesting, the DXY is after the events that occurred, in the Middle East, that has gone up. So the DXY is now sitting at 100. And basically the DXY is a dollar, against a basket of currency, mostly the euro, but other currencies as well. And it's been going stronger and stronger. How do you think that would impact your project?
Well, I'd say since it's against like a basket of very strong currencies, the euro, the Japanese yen,
Mm-hmm.
British pound,
Yep.
the Canadian dollar, I'd say those are like the major currencies that people look into when um looking at volatility. And us, we've been looking at Euro USD versus like Euro USD, so the European currency versus the USD. And that strongly impacts our project. And like it has become more volatile. Like I've was looking at how much volatility spikes have been noticed with like the current Iranian wars and all that. And yeah, it greatly affects our project, especially considering that we are looking specifically at, Euro USD data.
Great. Okay, so keep on working on it. Obviously, it's very topical. Volatility is extremely topical right now, right? Wouldn't you agree?
Yes, I would definitely agree. Like I was reading the news this morning of like just an understanding of what has been happening and just trying to see like where volatility lies in terms of that, and just understanding that, like we don't exist in a silo, like we don't exist in a vacuum. So everything that's impacting the financial market affects everyone. And when you're looking at something like volatility, which is whole encompassing, it's not just one event where you're looking at like, okay, this is happening to this segment of the business. It's happening everywhere. It's affecting a lot of things, and a lot of things affect how volatility is measured and how volatility is, like interpreted in the financial world. So especially when there are other factors like strong economic factors that are affecting the movements, the financial market in general. So yeah, so it really is very topical, and it's something that we can keep watch of, but like hopefully with the models that we've been trying to put in place, we can better approach it or better understand it, or well, better be prepared for the market, which when you talk to professionals, they might tell you, okay, yeah, that's every trader's dream to be able to look at the market and be like, okay, I know what's going to happen,
Yeah,
right?
exactly. Great. Well, thank you very much for your time, Tanya.
Thank you so much, Professor Zara.